The difference between $10,000 and $10 million isn't just a bigger bank account. It is a complete transformation of how you perceive time, risk, and human connection. At $10,000, life is defined by the margin of error. You are living in a state of high-frequency anxiety. If your transmission fails or a medical bill hits, your entire financial ecosystem collapses. You are trading your most valuable asset, time, for survival. The math is brutal. You are likely making $15 an hour, meaning every dollar you spend costs you 4 minutes of your life. At this stage, your primary mission is escaping the gravity of debt. You are not an investor yet. You are a target for interest rates. Credit card companies love the $10,000 net worth individual because you are the fuel for their profit margins. You feel the weight of every purchase. You aren't buying coffee, you're buying 10 minutes of your life. It feels like you are running on a treadmill that is tilted upward and you cannot afford to stop moving, even for a second. Jump to $50,000 and the air gets thinner, but you are still in the pressure chamber. You have saved a bit. You might have a modest emergency fund. For the first time, you have the luxury of saying no. You can walk away from a toxic boss, but only for a month or two. Your net worth isn't high enough to fund a lifestyle, but it is high enough to fund an exit. Most people at this level fall into the trap of lifestyle inflation. They buy a slightly better car or they move to an apartment with a dishwasher. The danger here is the illusion of stability. You think you've made it because your savings account has 5 figures, but you are one layoff away from the starting line. At $50,000, you should stop viewing money as cash and start viewing it as a tool for leverage. This is where you test your appetite for risk. If you don't take a calculated swing here, you will stay stuck in the middle class for decades. At $100,000, you cross the first psychological threshold. This is the great filter of personal finance. Most people never hit this milestone because the friction of life pulls them back. Once you hit that 6-figure mark, your money starts doing things on its own. If you have an 8% return on $100,000, you are making $8,000 a year while you sleep. That is roughly $700 a month. You are effectively getting a part-time job that requires 0 hours of labor. This is the moment you realize that work is optional if you can lower your overhead. However, the trap here is arrogance. You start thinking you are an expert because you followed a budget for 3 years. You start looking at leveraged investments or risky crypto plays. Remember, Charlie Munger said that the first 100,000 is the hardest, but the most important. Don't lose the engine that got you there by chasing a shortcut. Moving to $500,000 changes the architecture of your life. You are now playing a different game. At this level, you aren't just saving, you are managing a portfolio. Your decisions are no longer about avoiding ruin, they are about tax optimization and asset allocation. You are looking at the difference between tax-advantaged accounts and capital gains. At $500,000, your money is now earning $40,000 a year. That is a full-time minimum wage salary generated entirely by your assets. You are now officially independent of your labor. You could technically live off the returns if you moved to a lower cost of living country. You have enough to start a business or pivot your career entirely. The fear of survival is replaced by the fear of stagnation. You worry about inflation eroding your purchasing power. You realize that keeping money in a savings account is a slow-motion disaster. You begin to value time over things. You stop caring about the brand on your jeans and start caring about the quality of your network. At $1 million, the world changes. You have reached the millionaire next door status, a term popularized by Thomas Stanley in 1996. 1 million is the threshold where your net worth enters the realm of compounding velocity. If you have $1 million and you maintain a 10% annual return, you are making $100,000 a year without lifting a finger. Your money is now your most productive employee. You no longer work for money, your money works for you. The social dynamic shifts here. People treat you differently. You get access to private equity deals, better banking rates, and higher-tier networking circles. But there is a hidden curse at the $1 million level. It is the not enough syndrome. You look at the people with 10 million or 100 million and you feel like you are back at the start. You might have $1 million, but your house is mortgaged. your kids have tuition, and your lifestyle has expanded to match your income. Many millionaires are functionally broke because they have zero liquidity. They are rich on paper, but trapped in their own lifestyle. When you hit $2 million, you have achieved true fuck you money. You can quit any job, leave any city, and reject any project that doesn't align with your values. At this point, your annual return is $200,000. You are earning more than the top 5% of earners in the United States, just by existing. Your biggest challenge is no longer financial, it is existential. Without the pressure of the daily grind, you have to answer the question, what are you doing with your life? Many people at this stage hit a wall of depression. They spent their whole lives chasing the number, and when they got there, they realized the number didn't come with a manual for happiness. You have to manufacture your own meaning. Some travel, some start charities, some become obsessed with fitness or art. You are finally free, but freedom is a weight of its own. Now, consider the $5 million mark. You are firmly in the top tier of net worth. At this stage, your investments are generating roughly $400,000 a year in passive income. You can sustain a luxury lifestyle indefinitely without ever touching the principal. You are effectively a private fund manager. Your time is now your most precious commodity. You don't take meetings, you don't deal with logistics, you hire people to handle the mundane aspects of life. But with $5 million comes the tax burden. You are no longer just an individual, you are a business entity. You need tax attorneys, estate planners, and wealth managers. You are playing a high-stakes game of defense. The government is your biggest partner, taking a significant slice of everything you grow. You learn that keeping the money is often harder than making it. Finally, at $10 million and beyond, you have entered the realm of structural influence. Money is no longer currency. It is energy that you can direct toward changing outcomes. You can influence companies, fund political initiatives, or build legacies that outlive your biological lifespan. At $10 million, you are generating $800,000 to $1 million a year in passive returns. You can fail at a business venture, lose $1 million, and your life will not change one bit. You have become anti-fragile. Your net worth is a fortress that protects you from the chaos of the world. Yet the human condition remains. You still face loneliness. You still deal with the fact that people are rarely honest with you because they want something. You are physically separated from the problems that plague the average person, which can lead to a profound sense of alienation. You realize that while money solved every problem related to physics and economics, it created a whole new set of problems related to psychology and purpose. The journey from 10,000 to 10 million is a shedding of skins. You start by learning how to trade labor for survival. Then, you learn how to trade capital for security. Eventually, you learn how to trade strategy for freedom. But if you look closely, you will see a strange pattern. The people who are the happiest at 10 million are the ones who lived with the same curiosity and grit they had at 10,000. They didn't let the money become their personality. They realized that net worth is just a scoreboard for how much value you have added to the world, not a measure of your worth as a human. Most people spend their lives chasing the next level, thinking it will finally deliver a sense of peace. But here is the secret that the wealthy know. The peace doesn't come from the number. It comes from the realization that you were enough before you had the money, and you are still enough now. If you don't find peace at 10,000, you will not find it at 10 million. The bank account changes, but the person looking in the mirror remains the same. The question isn't how much you can accumulate, but who you are becoming while you are accumulating it. Because at the end of the day, when you reach the final level, you will find that the best things in life, time, health, and authentic relationships, are the only things that don't depreciate. Start building those today, regardless of what your balance says.